Greetings, everybody. Today, my subject is why I don't want the Fed to lower interest rates. Uh, Now, that's kind of a popular topic in the headlines. Everyone wants the Fed to lower rates, makes money easier. But I'll explain why I don't want the Fed to lower interest rates. And it's because I am not a borrower, I am a saver. Um, so I make money by having cash invested in the market, and across all of the different investment accounts, the IRAs, 401k, Roth, HSA, each one has a little bit of cash in those accounts that's uninvested. A couple of them have fewer investments and more uninvestments. That's a word. But basically, I kind of summed it up today, and through all the different accounts that I have, I've got about $250,000 sitting in cash across all of these investments. And what that means is I'm earning 4% on those investments right now because I use the Fidelity system, which I really like. If you haven't taken a look and look at that, Schwab and Vanguard and some of the others, your core account doesn't easily get invested in money market accounts, but Fidelity makes it really easy. So that's one of the reasons why I really like them, because your core cash account is automatically earning 4%. Excuse me. So if the Fed lowers interest rates by 1%, well, I don't earn that 1% anymore. So that's a hit to my personal finances of $2,500 every year that I won't get if the Fed lowers interest rates. Now, I have various investments, and I know when companies can borrow cheaper, that makes their prices go up. So in the end, it's probably a wash. It's fine. When companies can borrow at a lower money or lower amount, that makes their profits go up. But for me personally, because I have excess cash, lowering of interest rates will cost me $2,500 a year. And about a year ago, when interest rates were at 5%, I was earning $2,500 more. So the fact that the Fed has lowered those interest rates makes it so that I don't earn as much. Now, I'm Generation X. I feel lucky and blessed because I've saved and worked and have assets. I'm an engineer, so I had a higher than average salary, although that decade it took me to get my schooling is a lost decade to me. So there's a trade-off. I also helped my mother invest, and across her accounts, there's also a couple $100,000 that is not invested, that's sitting in money market accounts. So again, for her generation, she's a baby boomer. That maybe she has $250,000 too that's just not invested, but the 4% yield is fair, and it's kind of a safer place to be in money markets than opposed to stocks. So that kind of explains, the difference, the class differentiation between the young folks and the older folks. Folks like me and my mother who have assets, a interest rate reduction will actually reduce the amount that we have every year, whereas if you increase rates, it actually increases it. So it's kind of interesting to think of that. It's a way that wealth transfers through our economy. When the government borrows money, they pay interest on it, and so basically everybody is paying paying funds to my mom and to myself. We don't mind taking that interest, and these money market funds generally they invest in T-bills and other government-related securities. So it is basically a transfer payment from the government to us by giving us these extra amounts. I know it goes into banks and things, but in general, the banks just invest in T-bills and other things in general anyways, or things through the Fed. So the interest rates are basically a way to force the government to pay a fair amount for the money it's borrowed. And for a person like myself or my baby boomer mother, we actually benefit from having higher interest rates as opposed to lower interest rates. We don't have borrowing, like my house is paid off, my mom's house is paid off, we own cars. We just don't borrow. So low interest rates help borrowers, but it hurts savers. So that's kind of the basic idea of why I don't want the Fed to raise or to lower interest rates, because I enjoy the interest expenses or interest money market fund rates that I'm getting, and I'd rather have rates that are higher, even though all my stocks would probably do better if rates were lower anyway. So it's a trade-off. But in general, high rates help savers and penalize borrowers. And since I'm a saver, I'd rather have higher rates. So there's a thought for the day. Bye.